Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody guys, let's talk again on the euro currency. In our weekly research we in general have pointed the major questions on the current situation, and in the short-term perspective we should understand the nature of this rally that we've got on the Friday on the farm payrolls release, because depending on how market will stable with this rally and whether it would like to continue it or not, it will clarify what to expect in the nearest future. Right now guys, based on the current action, it seems that market looks more bearish rather than bullish, because the response on the rally seems really mild and market mostly erase almost all the action. Still, we should rely on the clear signs, on the rules of the technical analysis. So until the major level will not be broken, we can't point with 100% probability that the market is definitely bearish. That's why the risk every time exists when we do not have the clear confirmation yet. But still, you could act a bit differently. So there are traders who feels that it could take the more risk, they could act right now. Others, more conservative traders, could wait for a bit more confirmation, more confidence of the bearish sentiment, and maybe market will form it a bit later. So what we have right now on the daily chart. On the daily chart guys, and what's the most tricky moment here? You know that we stand in this long-term consolidation that looks like the bearish flag on the high time frame charts and so on. And right now guys, we mostly the major riddle for us in this situation. Why? Because in fact what we have, this downward ABCD pattern. Market has hit the minor 618 extension and after that had turned to the upside retracement. The rally that market has formed on Friday, in fact, was the completion point of this small A, B, C bottom D pattern. AB equals CD retracement, that in turn forms this possible Gartner's 222 sell pattern. Okay, that's the first view on the current situation. At the same time, trend calls bearish right now. At the same time, guys, market has not broken through these lows, and potentially, theoretically, if we suggest that market will follow this rally and this weakness in the United States dollar, it could form theoretically this bottom line. That's why the one scenario that we have discussed on our weekly research, we said that if market will follow this rally and taking out of this top and continue move higher, will shift trend to the bullish. That could lead market right to the opposite border of the upper border of this consolidation again, this area around 118. This market could form this bottom line. Okay. This is the one situation. The second situation is market will break down and will erase this bottom line, break down this flag, will keep the trend bearish and will break through the lows around 1080 area. That will open road to the downside. That's why the current situation, this current consolidation, maybe it is particularly forming, because investors currently have no definite solution yet. So it's very, very responsible consolidation. At the same time, currently we see more bearish signs rather than bullish, because the nature of this action doesn't look like the thrust, and the market really could abandon this area. It should show some acceleration, something of that sort. But here we would not see choppy action with the significant returns, overlapping candles, long shadows. Mostly looks at consolidation in the bearish flag. Trend holds bearish, and market has formed side by side two bearish grabbers. First, it has happened on the rally on the Monday, on a Friday. Yesterday also was an attempt to continue move higher, but market again has failed. Both times market has failed to pass through the monthly pivot point, and that looks bearish. That's why if you're if you have the bearish view on the euro and you think that you could take the risk, you could try to trade the grabbers directly, because this is the patterns, you know, the invalidation point. It also coincides with the invalidation of the overall bearish setup, because the market will erase the grabbers. It probably will shift trend bullish, and this chance on the upward continuation will increase. So you could stick with these grabbers and trying to trade it directly. Other traders who also have the bearish view on the market, but the more conservative, needs to more confidence, more confirmation from the market. For you, is just to expect and wait when the market will break these lows. As soon as this will happen, we will get the confirmation that market probably stay on the bearish way, step on the bearish way, and will start form this butterfly. The next destination point will be nearest target, approximately at 108. Approximately at 108 will be, because as soon as market will break below these lows, it will mean that it will start action to the next target, because this target has completed. As soon as market has moved below its target, this target, it means that it's ready to continue move to the next one. So that's why breakout of these lows simultaneously will mean probably the continuation to the next target. So if you're bullish and you would like to take the long position, so you need to wait for failing of the bearish scenario right now. Currently you can't take the bullish position because trend is bearish and you have the grabbers that stands against you. To take the long, you need to wait when the market will break it out and continue move higher. In this case, you could try to take the long position on some minor retracement with the expectation on 118 area. So as you can see, scenarios are very clear right now. If you take a look at the hourly chart and most recent action, we see mostly again the bearish development. Because take a look, market has failed to continue move here based on this upward action, but at the same time it hasn't erased yet this rally totally. Market has formed some kind of the thrust up ABCD retracement. So here it has completed this ABCD action and now stands the upward action. So still market simultaneously stand below the weekly and monthly pivot, so market wasn't able to hold above them. That's also look bearish. Here guys, it's very difficult to predict the possible retracement, but if we assume that market will form some kind of the A, B, C bottom minor extension, and probably it will reach the 1260. 618 minor extension, this could happen. Or maybe it will stop at 1240. This will be the 50% that euro currency likes to follow. At the same time, guys, market will fail to pass through this area that we have discussed in our weekly research, this combination of the pivots, weekly pivot, monthly pivot, and 3/8 fib resistance. So market could stick here, stuck here, and will turn down. It's probably the area that you could watch for taking the short position if you would like to trade grabbers directly. That's in fact all that we see right now on the euro currency. That's been said, 3 different scenarios. For the active traders, aggressive traders, you could use such sort of retracement for taking the short, because daily trend is bearish. On the 4-hour time frame, trend is also bearish. You could try to take the retracement for taking the short position. For conservative bearish traders, you need to wait for the breakout of the 1080. For the bullish traders who would like to take the long position, you need to wait first the failure of all this stuff. All the grabbers should be erased. Market should shift trend on the daily time frame on the bearish side. Only in this case you will be able to take the long position. That's all.